market for us today, both short-term and long-term. So let's start with the short-term. How do you feel in general? And then we'll go to the chart.
There's strong resistance above the market, so the September T-bond will continue to trade lower the next couple weeks. Let's go to the first chart, which is actually a diagram, and we'll learn why a broken support level later acts as resistance. On the bottom axis there is time, the left axis is price, and that line represents a market. You can see there's a picture of conflict in the top left. Equally strong bulls and bears enter the market placing their bets. The bulls buying at the support line, which is the yellow one, the bears selling short at resistance, which is the green line. Then the scale is suddenly tipped and the market drops below support. The bears win and the bulls pray, please God, if the market happens to trade back up to my break-even level, I promise to sell out and I will never, ever do this again. If the market, it's happened to you, obviously, huh? If the market,
no, but I've heard about this before.
If the market happens to trade back up to that yellow line, the bulls will liquidate, creating resistance. Then the market will follow with another sell-off under the weight of their liquidation. Now we'll go to the second chart, which is a 2-month T-bond chart, and you'll see the resemblance there. The top right, top left, there was a picture of conflict. The bulls buying at 112, the bears selling short at 116. The scale was tipped. The market dropped below 112 support. The bears won, and now the bulls are praying for a move back up to their break-even at 112. So if the market happens to trade back up to 112, the bulls will liquidate there, creating resistance. Then we'll see another sell-off under the weight of their liquidation. So if the T-bond happens to trade back up over the next couple weeks, look to sell in the 112 area, anticipating another decline.
So that's where you would be, that's your next key mark, is the 112 area in T-bond futures.
Yes, September T-bonds, I'd be looking to sell 112. I'm anticipating a sell-off down to 108.16, which is a 38.2% retracement of this year's advance.
We're going to talk about the stock market, how this all interrelates to stocks. If the bull run in the financial markets is indeed over, how does that translate to a future for the stock market?
The stock market has failed at 47.50 on 2 occasions. Next, if it takes out the previous low of 45.50, it will form a double top, and the downside target will be 43.50. So the key level is 45.50 in the Dow.
There are those who would say that then would be a time to buy, though, that's kind of the pause that refreshes and we're headed up against towards that high.
The bond market's going to 86. The financials are all going down.
Okay, on that note, thank you, Alex. Nice to see you again.
Okay.
Alex Saitta has been our guest, and he is the Chief Technical Analyst at Solomon Brothers. Coming up in just a few minutes right here on Market.